Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Greg Case, CEO of Aon. Greg, nice to see you.
Delighted to be here.
So tell us about Aon's business mix, business model right now.
Well, listen, if you step back and think about what Aon does in the world today, we're very privileged. We serve clients all around the world, 120 countries, and really, in our view, one of the most important topics in the world today as they think about how they defend their businesses and build their businesses over time. So a risk set of businesses, or we call risk capital, which is really helping companies understand, measure, and mitigate all things around volatility. And we do the same for insurance companies on the reinsurance side. So that's really risk capital. We also have an opportunity to help clients think about other places of opportunity and volatility, and that's really on the human capital side. And also things around health and benefits and retirement and talent. And so really Aon is kind of risk capital and human capital. And in essence, what we're helping the world do is understand volatility in a way that which they can take action. And again, defend their business, support their business, but also more and more how they grow their business and do it in a way in a complex world that's most advantageous.
Sounds like an appealing mix. Let's talk about the insurance part per se, though. Are you an insurance broker's business, and talk to us about that core part.
Yeah, in essence, again, it's important, Andy, to understand we're not an insurance company. We're not taking fundamental risk. What we're helping clients do is understand that volatility. And when we see it and we help them define it, we can then bring solutions to them. So we're essentially matching capital with risk. That's the brokerage part. And then think about that we do it in a way in which really is pretty unique because we're doing it for companies, all types of companies around the world, 120 countries around the world. And we're also doing it for insurers. And now more and more, we're bringing a set of analytics that is, very, very unique in terms of how to help them understand these challenges and these opportunities.
Yeah, I mean, this part of the insurance business, premium rates have been strong, and this is a great way to play the insurance business from an investor standpoint without underwriting risk. Because it seems like you guys have done better. Some of your peer group, I don't want to throw in the names Gallagher and Marsh around, but there's some of your peers, and you guys have done very, very well over the longer term. It's such a good business, right? Well,
listen. The business comes back to what we do, and it really is serving clients. And if you think about the world we live in today, and think about just demand, what creates client demand, we highlight them around 4 mega trends that sort of exist out in the world today. And, and it was really around all things trade, all things technology, weather, and workforce. And these 4 mega trends create client demand. And so our world is helping clients understand how to deal with that, that set of challenges. And that's why it's such an incredibly rewarding business for us, for our colleagues, and we hope for our clients in terms of helping them think about this world and how it's evolved over time. But these 4 megatrends, Andy, you live this every day. Has the world become more volatile? We believe it has. We said 10 years ago we were worried about volatility on behalf of our clients. And what's happened is these 4 megatrends have just become more and more intense. And that's why we become more and more relevant, helping them address these challenges.
Yeah, I want to ask you about each one of those. But before we do that, just bigger picture, Greg, why do you think the world has gotten more volatile?
Wow. I'll tell you, if you step back, and again, I'll run through each one of these.
Yeah,
if you think about kind of where we are. But
is there anything underlying all 4 of them?
Well, but literally, yeah. It's if you think about it, what root causes of volatility? The world ages, volatility. The world becomes more connected, volatility. The communication technology that helps the world become more connected, it accelerates that. It creates opportunity, which is terrific, but it also creates volatility. So just consider trade. And I would remind your audience, we talked about these. We've been talking about volatility for over a decade and our concerns on behalf of clients. We talked about our Megatrends report a couple of years ago as we put it out. And I'm not saying it wasn't me, Andy, I can assure you, but much more intelligent people at Aon came with these 4, and you can always say, wow. I mean, we're talking about supply chain challenges a couple of years ago. Now, what's happened? They have become more intensified because of geopolitical challenges. And now, we have clients who spent years curating the most incredible supply chains, now to only find out that some of the areas in the supply chain world are becoming more and more difficult to execute because governments are not as aligned as they were before. So these types of things amplify. Technology, if you think about what's gone on with generative AI, technology before was a great, great connector, and that created challenges. But now with generative AI, massive opportunities, but also massive challenges. And then weather, climate. If we were sitting here, months ago, we'd be talking about one type of, the hurricanes. If we were sitting, a few weeks ago, we were talking about wildfires. What's happened in the world today around literally, fundamental challenges around climate have just become more and more significant. They're part of the day-to-day business discussion. Very, very different. And then think about, as you come out of pandemic, what's going on with talent? How do you find talent? How do you retain talent? How do you nurture and reinforce talent? All these things, Andy, for a whole series of reasons, each have become problematic. But then the last thing I would say on this, and it's a really important point because it really can't be talked about enough. It's really what our clients feel every day. Individually, each of these is bigger, but collectively they're connected now. You can't talk about real weather challenges, climate challenges, without understanding the implications on talent. You can't really address those challenges without really understanding what it means to a fundamental business's supply chain. And then technology is all the things that connect all those. So it's individually bigger and now connected, which creates more complexity.
You're scaring me a little bit.
Not trying to.
That's okay. How do you stay abreast of all these things as they kind of ebb and flow in terms of the degree of difficulty, if you will? And then how are you deploying capital and resources at your own firm to address these problems/opportunities?
Both incredibly important questions. And I love the way you asked the first one. How do you actually stay abreast in terms of what's going on? For us, this is where we've had to really double down and ask some questions around, how do we continue to build content, capability, and insight such that it would be credible in a way that we can help clients understand these risks. Because it isn't about, talking about it. You got to have quantification. What are the fundamental drivers of volatility in your business? How do you quantify them? How do you then mitigate them? By the way, there's a cost of mitigation. How do you justify the cost of paying for risk reduction in a way that it needs to build your business? If it does, fantastic. If it doesn't, then you're spending money you don't need to spend. That level of precision is required to be credible with clients. And so for us, we've done things around defining our firm around risk capital. No one's ever done that before. This is connecting reinsurance insight and commercial risk insight. We've done things on the human capital side with talent and retirement and health. No one's done. And we didn't do it because it was interesting. We did it because we believed it was required to actually get the data in a position where we could do the analytics to give our clients insight. So it's really how we've attacked that and what we've done over the last number of years to do that.
Which one of those four risks is most worrisome to you?
Well, I have to tell you, the interconnectivity means they all kind of come back and link.
Or is that number 5? All the above?
5 is all the above, really. And again, we see people talk about these all the time, but clients are living them, and they live them through literally the performance of their business and the impact on their people. I'm with the CEO of one of the biggest contractors in the world last week. He's talking about literally climate risk, and what they're worried about actually is, I'm going to bid a multi-year contract. It's massive. I've never really worried about the fact that if it's above 120 degrees, I can't put employees on the field. What does that really mean? How do I change the bid process of what I'm doing? Well, that's fundamental climate risk and talent embedded in it. Is there something you could do to mitigate my bid risk if I'm going to go after this? And we're creating a parametric instrument, a parametric bond for them to be able to actually, if something goes completely off the charts on the climate side, that they're going to get paid back. So they reduce some of the financial volatility. These things all link. So it is kind of all the above.
Right. I'm sorry. What does parametric mean in that context?
All it really is, again, not complex really. Sounds complex, really not. It's just an analytic definition that if, instead of an insurance policy, if an earthquake happens, you pick a very precise measure around what earthquake impact would be, and you actually pay based on that parametric, that outcome. So if you literally were going to create a few $1 billion of cover to rebuild on an earthquake, and it was a policy, you'd have to have it actually come in and remediated and looked at and adjusted. In a parametric bond, if an earthquake of this magnitude happens in this zip code, it happens immediately, automatically payment. And so this is a unique way to bring access to additional capital beyond the insurance world. But the real point is it's off of a connected set of risks.
Yeah, that's fascinating. And I understand you're involved in GLP-1s, which are weight loss, or what are called weight loss drugs. And there's some news recently about that concerning there's a new pill, a weight loss pill, recently. So I'm not sure I understand the connection between what you do and GLP-1s.
Wow. Thanks again for asking that too. Appreciate it. This is also right back to the megatrends and the connectivity. So think about it. We're Aon. We're trying to help our clients understand volatility. What's the most important thing most businesses have to do what they do? It's their talent, their people. Think about what a company does. They're trying to retain talent. I want to give you a salary and I want to give you benefits, but I also, as part of those benefits, want to include things on retirement and health, et cetera. Consider the health costs in the United States. It's 21% of GDP. That's amazing. By the way, it's going to be 24% by 2030. It's going up 9 to 10% every year. Per unit cost of healthcare going up. How's health doing? It's deteriorating. So how's this working? Are we really getting the economic benefit for it? So we do tremendous amounts of work with our clients around literally how you think about the benefits that you provide on behalf of employees, how you support them from a health standpoint and health and benefits, all these pieces. So we have the analytics that are very, very unique. And then along comes the GLP-1s, which is really a drug that has lots of potential benefits on weight loss, but it turns out it might have benefits that go well beyond weight loss. But what's happening is because of the expense of the drug, you're a company, you're head of HR, you're in a really difficult spot. I'd like to do this because I think it might be helpful, but the cost is massively prohibitive. So one of the things I'm doing is trying to calibrate between the cost and whether I should do this or not. Or whether I should wait and just go slow. And right now, the corporations are going, our clients are having to go slow because it's required. Cost is too high. So, and the opportunity is, what if these actually could do something about population health? And I said to you, if you actually were able to introduce these into your employee base, that their health overall would be better. That could be amazing. If I told you, by the way, in doing so, their engagement might go up. And their productivity would go up, and the days lost would go up. So you've now aligned health, wow, and you've aligned economic benefit, wow. And so what did Aon do? Aon essentially said, we got to go to the analytics. So we pulled together a 50 million person database, never existed. We have all the health costs against that. We've been able to pull out from that database the 140,000 people who've actually taken the drug for 24 months, created an absolute mirror control group, and then asked the question, did the cost of health go up or go down if you're taking the drug? Never been done before. Never.
And the answer is?
Greater than a 10% reduction in trend. It's crazy amazing.
So it is effectual at that cost level.
Well, it's effectual. First of all, ask the question around is it effectual? Period. Do you change cost trend? Yes or no? Answer, yes, greater than 10 points. Stop there. That's massive. Second, then you incorporate the cost of the drug. And over time, you reach, if that's true, I mean, think about it. A 1 point change in trend in health is epic. It's massive. We're talking about it greater than a 10 point change. This is, and by the way, it's not just the trend cost. The other piece, and by the way, for our standpoint, it's not about the drug per se, which one you choose. It literally is about this therapy can reduce and improve health. And it's not just about the trend cost. It's also about the deferred onset of things like diabetes, osteoporosis, et cetera. And then the cost you spend is less about remediation and more about prevention. And so over time, at a 10+% trend decrease, you cross over, no matter the cost of the drug, even in the current cost, but the cost of the drugs are going to come down. So for us, we think this is a generational opportunity, literally. Not trying to overstate it, a generational opportunity to improve population health in a way we've never seen before. So now our goal is to how do we help our clients introduce that into their work groups in a positive way.
Right. So in other words, what you're saying is that your work shows that companies should incorporate paying for this drug as part of their healthcare plans.
What we want to say is,
or they should consider it.
It is worth the consideration in asking the question, how do you think about the drug? How do you think about diet and exercise and the things that come with it in a way in which you could improve population health? Right. And if you improve population health, wow, if that trend in the U.S. didn't go from 20 to 21% and you were able to actually stabilize that, think about the implications. The economic implications for the U.S. are profound.
Yeah, right.
And it's built up at a company level, at an employee level. And this is why, we're excited about the possibilities in terms of sort of what it might mean for our clients, but we want to be very thoughtful about how we do the analytics. But it all comes back to analytics. Right. And that's what Aon did. Speaking
of analytics, I want to ask you about your stock.
Sure.
It's been a real success story over the past decade, but this year to date, the stock has lagged the S&P 500. Mm-hmm. Why are both those things true?
Well, listen, we'll come back. First of all, I appreciate the longer term recognition. Listen, our life starts and stops with our clients and our colleagues. In essence, we always say we have two jobs at Aon. You're either helping a client or you're helping a colleague help a client. And that's why, in the end, we've had to do some very difficult things to continue to drive innovation at our firm. We took some steps last year to drive what we call a 3x3 plan. It's fundamentally going to ask for a step change in client experience. And we believe that will show up in the share price over time. So you make a series of commitments and bets that are about clients and colleagues, and that does wonderful things over the long term if you're successful. And we've been fortunate, and we're more excited now than ever before about the possibilities.
Does that mean investing more in the business and that hurt margins, and Wall Street didn't like that? Or what is Wall Street asking you for right now, Greg?
Wall Street literally is trying to understand what are the impact on the GLP-1s with clients, and how are you helping facilitate it? How are you thinking about the next generation set of ideas around risk and risk management? The insurance world is a $4 trillion capital base. How do you bring in pension, high net worth, and sovereign? That's $250 trillion. These are the things Aon's in the middle of. And we're very excited about the possibilities on behalf of clients and what this is going to mean. And we believe, as has been the history, Wall Street will be equally excited as they see it play out over time and they see what we can do for our clients. What we've told Wall Street is, and by the way, we're going to do, the first in a very long time Investor Day on June the 9th. We're very excited about it, just coming up. And we're essentially going to go through what are three mega bets for us. Risk capital and human capital never existed in our industry. Now does through Aon. What we've done to enable that through the analytics, something we call Aon Business Services, it's 16,000 of our 65,000 colleagues is in Aon Business Services. It's taking the analytics I was describing before, injecting it from the reinsurance world into the commercial risk world, way it's never been done before. And that's a massive bet. And it's a bold step. And then we deliver it through something we call Aon United, which is a connected global firm in terms of what we're up to. And so what we're going to talk about on June the 9th is a next generation client experience around what that means. And so for us, we're excited about this for our clients and for our colleagues, and we believe also for our shareholders.
Tell us a little bit about the background of the company, the name Aon, the history of the place, how you're differentiated maybe a little bit from some of your competitors.
Wow. Love the question. Thank you. Well, first of all, if you go back in time when Aon came together through many hundreds and hundreds of acquisitions over many years. But back in the mid 80s, Aon came together, bought a company called Combined Insurance, but looked for a name that could represent what we were trying to be. This is well before I was at Aon, and Aon came to fore, and it's Gaelic for oneness. Back to kind of a connected global firm. Who knew? But it plays now, and certainly played back then. If you ask yourself fundamentally what's different about our firm, you ask it through the eyes of the client, as I've said before, and you come back to when we bring a connected global firm, that means our all global capability comes to your backyard, Andy, in a way in which you can feel it, you can see it, you can affect your business. We win more clients because we're more meaningful for them. We do more with them, and we keep them longer. And in our view, that's the requirement to actually serve clients in an effective way. And, risk capital and human capital was required because we needed it to deliver for our clients. Aon Business Services, the 16,000 colleagues I described before, needed because we needed to be able to curate data in a way no one else could do. And then we needed someone who could deliver it in an effective way. So for us, these structural differences are meaningful for our clients. And, we've been talking about a connected global firm, Aon United, for now almost a decade and a half. So that foundation built that. And now we're accelerating it. We call it going further faster with these three big, bold bets that we talked about in 2023.
Tell us a little bit about your personal journey, Greg. I know you went to Kansas State. Boy, I'm blanking on the mascot.
Wildcats.
Wildcats, okay. You went from being a Wildcat to Harvard Business School and then have been at the company or been CEO since 2005, I believe, right?
Give or take, yeah.
So I want to ask you about that. And then also succession, how long you're going to be staying around in the job.
Well, listen, I've been enrolled for a while, as you highlight. I've been incredibly fortunate. Listen, I came to Aon with really excitement, high expectations. They've been massively exceeded. My colleagues are amazing, truly amazing. The opportunity we have to support clients around the world, extraordinary. And not just individual companies, but, we did some things around the world with Ukraine. We're bringing capital into Ukraine right now for rebuild right now.
Right.
During the wartime, unheard of. So all these things are great. And I've been very, very fortunate. And listen, there are so many colleagues at Aon who are exceptional, way better than the current CEO, I can assure you, Andy, who are out there, and very excited about the next generation of leadership to take us forward.
All right, and final question, Greg, and I want to ask you about the stock. You've got an $85 billion market cap, PE of 30, revenue about $13.5 billion. Why should investors buy this stock right now?
Wow, if I were an investor, I would step back and ask fundamental demand and capability. So-called demand supply. Demand for what we do is massive and going up. And we're relatively underserved market because it's still actually, if you think about what's going on, how much, the insurance gap you hear about all the time, it's massive. So we're in a world in which demand goes up. This is back to your earlier question. Why is this such an interesting business? And then why are we so uniquely positioned in that business? Fundamentally, demand's going up. Volatility is going up. And I just described, we have the ability to serve it in a way no one else does. Risk capital and human capital doesn't exist. And business services doesn't exist. And what we do in enterprise to deliver the firm doesn't exist. So we're leaning into a world of high demand with greater capability than anyone else through the eyes of our clients. So for us, we're pretty excited about what we think the next 5 to 10 years is going to be on behalf of Aon.
Greg Case, CEO of Aon, thank you so much for joining us.
You're most kind, Eddie. Thank you so much.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.